for in terms of predatory lending and things that if it happens to you, you should be on the lookout. And one is a very common practice in which home improvement contractors go knocking door to door.
And then one day I was sitting in the living room and a knock came on the door. And there was this very nice looking sort of 40-ish young man. He felt that I needed to have a loan to do the repairs on the house and perhaps have a little extra to go and see my grandkids. And I said, that would be nice, but how are you going to do that? I don't have any income.
You have to look out for yourself, ask the questions, do the homework, ask around, research. Don't sign anything right away. Say, I'd like to think about it. I'd like to talk to someone about this.
And I still said, no, I have to talk to my daughter. Let me call her. And he said, well, this is a very special loan, you see. It only is going to last for 2 days.
You need to take your time. Rates, although they do change, do not change dramatically day to day.
Well, in the afternoon, he showed up on the doorstep and he had all the papers, and I still hadn't talked to my daughter. But he was so nice, and he really convinced me that everything was going to be all right, and, you know, and I thought he said he had taken care of his mother, so... And he seemed to care about me. He wanted to help me, and boy, did I need help. So I said, all right, and I signed the papers.
One of the things that we want people to be on the lookout for are very aggressive techniques that cause you to make decisions before you're really ready to make those decisions, where people are forcing you into a situation that you may not want to find yourself in.
If you don't do anything else, ask questions. And if you don't understand the answer to the question, ask it again. Ask it in a different way. Make sure that you know exactly what you're getting, you know what's being offered, and you know what is expected of you.
Once the process started to go through, I started to say to myself, you know, this sounds a little too good to be true. So at that point I said, you know, maybe I should talk to some people who really know a whole lot more about this than I do. And it just sounds to me like it's, you know, a little fishy. And I brought the paper that she actually did send to me, which is nothing. It's just this one sheet of paper. It's not even on letterhead. So I'm really starting to get a little concerned. I really don't know what to do.
And the percentage was 14%, it says here. Is that what she quoted you?
That's not what she quoted me over the phone. She quoted me a percentage of about 9 or 10%.
What you said about how you were promised one interest rate, and then when you got this document, in fact, it's a much higher interest rate, and the difference is 5 points. So that's substantial.
And we are set to close on this loan in just a couple of days.
All right. So the first thing that we have to do is call off the closing, because who knows what else they're going to hit you with when you get to the closing. I noticed that there's blanks here that are above where, you know, the signature line for you. And you want to be really wary of a document like this, because after you sign it, the people that you're dealing with might fill in some blanks on terms that you don't even know about. I cannot advise you strongly enough not to sign any documents whatsoever.
You want to be sure that all of the loan terms that are being offered to you are ones that are safe, that are going to serve your financial interest. And again, that's why it's important to seek advice from a lawyer, from a nonprofit housing counselor that may be in your community. You can find them in the phone book or from the Fannie Mae Foundation. But it's important to seek advice, to ask questions, to be sure that everything that's being offered to you really fits your best financial picture.
Learn as much as you can so you can borrow wisely. Call the Fannie Mae Foundation toll-free at 1-800-792-7300 and ask for your free copy of Borrowing Basics. What you don't know can hurt you. The Fannie Mae Foundation does not provide loans to home buyers. We help first-time home buyers with free information to help you make more informed borrowing decisions. Put yourself on the smart road to home ownership. Call the Fannie Mae Foundation at 1-800-792-7300 and ask for your free copy of Borrowing Basics. If you call now, we'll also send Opening the Door to a Home of Your Own, a step-by-step guide to the home buying process, and will include Knowing and Understanding Your Credit, our guide to help you understand what credit is and why good credit is so important. These 3 guides are yours free when you call 1-800-792-7300.
I always say to buy a home, you have to make sure that your own house is in order. And in looking at your own house, to really look at how you've managed your finances all in the past. One of the first steps is to really get a copy of your own credit report and to be able to really review just how have you been handling your money.
Our biggest concern was that we had credit difficulties. We had filed for bankruptcy some years back, and we figured that that would probably prevent us from buying a home.
Maybe you can't buy that home today, but you can go through and possibly repair that credit to be able to buy a home in the future.
How important is your credit history?
Jenny, Eric, it's so nice to meet you. Glad
to
you
meet you
come
too.
in for homeownership counseling. Anything you want me to know?
Actually, we have a bankruptcy.
Okay. Well, I did see that because you sent me the authorization to do the credit. So I see that there's a bankruptcy. It's not the end of the world. It doesn't mean that you can never own a home.
So there is hope.
There is always hope. Establishing good credit, and in your case, reestablishing credit, is the first step. Maintaining the credit by paying your bills on time, never ever missing a payment, is important, and we'll get you there. The first thing I'd like you to do is to take out a secured credit card. That's a very good way to reestablish good credit. It's not to say that you should just open this account and not use it. It's important to demonstrate that you now understand how to manage money.
Okay.
So use it, pay your bill each month on time when it comes. We're going to put you on a budget.
Great.
You need to look where you can cut down.
Okay.
It's discipline. It's financial discipline. What I think I'd like to see is a few months from now, you'll have to get back in touch with me.
Okay.
We need a little more time to have elapsed from the discharge of the bankruptcy. What we'd like to see here is an understanding of the importance of good credit, because this will last a lifetime for you.
We knew we could do it. We knew we could start again. It was our second chance. And we figured if we do it right this time around, we'll actually own a house. We had to cut back on all the treats, and, you know, every time we went out, no more toys. We were also encouraged to cut coupons and to save X amount of dollars every week out of the paycheck. There was a goal. There was a goal, and there was that light at the end of the tunnel, kind of. And we kept looking at that, and no matter how tempting it got to get off that road, we always stayed focused.
If you can demonstrate to a lender that you are proactively moving forward, that you're dealing with your problems, that your problems are in your past, not in your present, and are not likely to be in your future, you have every likelihood of getting the yes, of being approved, of getting your mortgage.
How do you get the loan that's right for you?
Going about it the right way, correcting our credit and saving money, it was 9 months before we were getting our mortgage approval. That's not really very long.
Have you seen your report lately? Do you have any idea of what the status of your credit is now?
Yeah, well, she went over it with us, the credit counselor.
You have a copy?
Yeah.
I'd like to take a look at it,
She
try to
told
see
us-
where we are
She
today.
told us to bring everything with us.
Thank you. Just take a second here. We'll take a look at this, and we'll see where we're standing today. Okay. This is good. You come well prepared. You have done a very commendable job. So, let's get started. Take my advice. If I say anything, use any terms you don't understand, stop me so I can explain.
Well, one of the things that the mortgage counselor had mentioned was that we would probably have to pay a higher interest rate due to our history. But how do we know what is a normal interest rate?
What you should do is shop around. There's a wealth of information on the internet today. Also, your daily newspaper provides, generally on Sundays, there's a real estate section, and they'll advertise their best rates. Now, when you're looking at this rate, it may not be the rate that you can get, because the rate's really generally predicted on somebody with the best credit profile.
In many instances, people with impaired credit represent a higher degree of risk to the lender. And so to cover that risk, the lender may charge a little more in terms of the interest rate in order to cover that risk. And that is a very normal business practice for many lenders across the country.
But the fact that you have a higher interest rate, it should still be a somewhat reasonable rate. It should not be a rate that seems excessive to you. And again, doing your homework is the best way to check on that.
It's all so foreign to us, the whole home buying process. One of the things the other mortgage lender said we had to pay was this prepaid credit life insurance, and I had never heard that before.
A life insurance policy can be a good thing, but what happens is if you're asked to pay this up front and it becomes part of the mortgage, you are now paying this over the total 30 years if you have a 30-year mortgage. That is not a benefit to you. That's a situation that you should probably be a little wary of.